Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
Okay, so today we're going to do a market update for Las Vegas. This is just a weekly update that we do. We get new data every week. For some reason, it comes out on Sunday, but it's showing the previous week.
Okay, so it comes out Sunday nights for the previous week, and so you are the first to see this.
Yeah, this is all super accurate data and everything. We are in our little countdown to 1,000 videos. We have like 12 left or something, maybe 13.
Yes.
So it's going to happen weekend after next. We'll do our 1,000th video.
Okay.
We haven't figured out exactly what we're going to do, but we're going to do it. Okay. All right. So this is now the data we get on this are for houses and townhouses, single family homes, just in Las Vegas. So if you see the inventory number go, Todd, blah, blah, blah said, ignore that. The whole MLS covers a whole bunch of stuff that's not Las Vegas. What we do is every week we focus on Las Vegas and we just look at the changes.
Right.
So we don't care about the other North Las Vegas or Boulder City or anything like that. Okay. So the first thing we're going to do is talk about the market action index. Anything below 30 is a buyer's market. We never got below that.
No, we didn't. And the reason we do this, by the way, is because it's much more accurate to track the change than it is to look at individual little pockets. But as far as the market action index is concerned, it's well on its way to being even a hotter seller's market than it's been, which I understand if you're a seller, if you haven't felt that way, but it never quite got to be a buyer's market. It stayed in the seller market range the entire time, even through the fall and all that chaos.
Yeah, it was a slight seller's advantage. It still says slight seller's advantage. We did have a little pickup of inventory. We're going to go through all the data on here. But this 43 is the highest it's been about since last summer. Dropped off pretty fast starting last summer. Okay, so we'll zip on over to the real-time market profile here. We'll start at the top, median list price. Now, we saw this starting to go up in January. This is when we said we think we're at a bottom. And of course, we were right because January to February prices went up. February to March prices went up. March to April prices will go up because you can see that median list price went from 45 to 540. But then if you go down a couple, price per square foot, 253. So it went from 250 to 251 to 252 to 253. It went up $1 a square foot every week.
Right.
That's
a lot.
But especially given we were told we were going to be 40 or 50% cheaper than we were last year. Home prices are going up. Like there were zero scenarios which any people thought home prices would be going up like week over week for 4 weeks in a row.
Right.
It's not noise if it's 4 weeks in a row.
Right. It isn't noise. They are going up. We do recognize the economic indicators out there as far as the storm clouds on the horizon. They've been on the horizon, you guys, for a year and a half. And yes, I mean, there have been some negative economic news, but it just seems like they're magnified mostly because we've had these economic storm clouds on the horizon for so long that any negative news gets magnified.
You know what? I'm still waiting for Y2K. I remember sitting with people in Y2K that were telling me, this was 1999, right before it was going to flip over to 2000, that literally the electricity grids were shut down, that the food supply would, we couldn't distribute food, the air travel would completely shut down. Like people were buying cabins in the mountains and storing food. It was going to be over. And literally the next day we woke up and it was like nothing's changed. It was, right? It was whatever. Okay. And we're going to go through, now there's one piece of data in here that did shock me.
Okay.
That surprised the hell out of me.
Okay.
And we're going to go over that, but not right now. But if you go down this list, you can see that inventory has declined every week now since October, November. And then you can see market actions. Really, everything in this does not indicate anything bad happening. Now, before we go to the next one, let's talk about this real quick. The people that watch the videos either watch for one of two reasons: stuff going on nationally, okay, or Las Vegas.
Right.
Okay, but let's say there's a recession. That just means 2 quarters of negative economic growth.
Right, and we've already had that. and we've had it a couple times in the last year and a half.
Okay.
So that really hasn't been the trigger for anything horrific happening.
Okay. Let's say you run a company, a big company, and your business is booming. And you turn on the TV and you're the CEO and it says, we're in a recession, the economy's shrinking. And you look at your book of business, your orders for whatever product you sell or whatever, and it's off the charts. People are buying a ton of stuff. Aren't you forced to like tell the people you're not going to make them that product and then fire a bunch of people? Like, isn't that what recession means? It means you have to ignore whatever your business says and you have to just do all this crazy stuff.
No, you don't have to do crazy stuff. You shouldn't do crazy stuff. A recession is 2 consecutive quarters of negative growth. But even when there are 2 consecutive quarters of negative growth, depending on your industry, depending on your business, you could be thriving.
Okay, what about location of the country? Does that mean every place in the country is doing poorly?
Not at all. Some places in the country do much better than others. Nevada got hit the hardest in the pandemic. We had the highest unemployment because so much of our economy is tourist-based, and of course people couldn't travel. So because of that, Nevada took longer to recover than other states, and we're still recovering. Look, the pandemic, even though it's in the rearview mirror, it was such a cataclysmic event economically that we are going to feel the shockwaves from this for a very long time, much longer, I think, than anyone anticipated. I know people thought that we'd be over it by now. We're not. Nevada is not even fully recovered as far as all of our jobs, and our unemployment's pretty low. Not all of our businesses have recovered. And you can look across the country that not every place has recovered completely. There are lots of markets that are still recovering and lots of industries that are still recovering. So the echoes from the pandemic will be a factor for a very long time, much longer, I think, than anyone anticipated.
And regardless of what happens nationally, Las Vegas tends to do better in recessions.
Right.
The great financial crisis was, Vegas actually did very well in that. What we did poorly in was right before it, which was the building housing crash, overbuilding, speculating. Okay. But by the time the great financial crisis came, Las Vegas was growing again. People were moving back. Homes were selling up like crazy. Home prices starting going up. I remember in 2009 doing one of my first videos, talking about home prices going up and literally being criticized people that they're still have further to fall. And I'm like, the inventory is going away faster than it go away. Home prices are lower than they've ever been. But now when you turn on the TV, you saw bad national news. But then what happened was you saw in like Las Vegas was doing much better. And of course, Las Vegas was, we were down, I think we're down 3.8% or something. We're the 4th or 5th worst market behind like San Francisco, San Jose, places like that. I think Boise, Austin.
Yeah, Boise was hurting too.
Austin. So we're down 3 or 4%. But now we'll go to price per square foot. Home prices are going up. Home price per square foot. This shows 4 weeks in a row. That's leading indicator. That's interesting too, because we talked about that, right? Right.
So price per square foot is a much better indicator of what home values are doing than just looking at the price of homes, because the price of homes is much more difficult to kind of pinpoint. Because remember, if there aren't a lot of transactions, it's a lot more difficult to figure out what's happening in that area. But if you're looking at price per square foot, then you can use a smaller data set to draw a conclusion.
Okay, and this is a perfect example of that. We're going to go to the next one, median list price. Now, the median list price in Vegas looked really ugly from the spring of last year to the winter, to the fall. And the reason it looked bad is because that top blue line, which is luxury homes. Luxury homes literally either didn't go on the market or only the lower end stuff was actually being put on the market, like not super high end stuff. If you look at the rest of the market, those bottom 3 lines, housing has just been sort of chugging along, right? But the high end dropping made this fake thing where it looked like the whole real estate market was tanking. And of course it wasn't. It's down 3 or 4%, which basically we said would happen, would be an adjustment. A lot of people said 40 or 50. I think we said 5 to 8 was what most we expected, was 5 to 8%. But the market the housing had gone up like 20% the year prior. So it was reasonable that it would adjust. But here's the interesting thing I want to show you about this. I tagged December 30th of 2022. And if you look at those numbers there, you can see that they're all, if you look all the way to the right, they're all higher. But this is an amazing thing. The top quarter of homes, the median list price was 938. That little round circle all the way to the right is 1.2 million. So since just this year, December 30th to today, the median home price of the median list price of the top quarter of the market is up like 272,000, 262,000. It's up substantially.
Right. So $250,000 is a lot of money. I don't care who you are. That's still a lot of money. And this really makes the point about what happens in the market. The market can turn relatively quickly. It turns sour quickly, but it can turn good quickly too. The people that were trying to sell their $1 million homes over the holidays weren't doing that great, but all of a sudden now they're doing much better. Buyers are out there. This is the main issue that we have right now is inventory, and I know we'll get to that in a minute.
Yeah.
The issue is that a good product, so a good home, will sell, and it will sell quickly. A product that leaves you wanting will stay on the market.
Okay. We're gonna look at inventory. This is the thing that sort of surprised me. Okay. Here's the inventory chart. Now, all the way to the right, that's us. That solid blue line is the 90-day average of inventory. That's if you look back over 90 days and average out how much inventory there is. The little dashed line is the 7-day average. That's more of a leading indicator. That tells us in the last 7 days how much inventory. So there's been less inventory in the last 7 days than 90 days. And you can see that is dropping substantially. Now, if you go back for the last 5 years, so all the way to the left of the chart, and then if you move over a little, you see where it says May of 2019, it's actually still in April because it's exact date, this week in April, right? And you see that little dot. In April of 2019, inventory was already going up. It wasn't tanking, it was going up. It's much higher. Remember, 2019 was pretty much a normal market, okay? 2020, you can also see there, inventory was going up. It had already reached the bottom and was climbing, okay? May of 2021, an extremely hot market. You could see that the 90 and 7-day were about even, and they shortly bottomed out and went back up again. Last year, at this time, inventory was increasing already. Now go all the way to the right. Inventory is still decreasing, and the 7-day average shows it's going to continue to decrease, probably into May and June. So Oana, that taking out seasonality, meaning, but we tend to get more listings in the fall. When I look at this chart, and I see that inventory is basically non-existent going much lower, what does that tell you about what the spring and fall might look like? Because we were told last fall the housing market would crash with there would be more homes than they were on the market than great financial crisis, than the housing crash of 2008, whatever, which was 26,000 in Vegas, or it was 26,000 in the MLS. We would need 40,000 in the MLS to have the same number. And now we have, just in Las Vegas, we have it's under 3,000. It's 2,000 something.
Yeah, it's about 2,600. So look, without taking into consideration all the economic news that's coming out this week, as there's lots of economic news coming out this week, just looking at this and just looking at what's been going on, what this tells us is lack of inventory means that buyers will have to do one of two things. Well, one of three things, actually. One, they're going to be fighting for the good houses. So that means that they're going to, that there's a possibility that there will be highest and best or bidding wars on the good houses. Two, that buyers will settle for something not what they really want because the inventory just isn't there, but they need something and they need it now. Or the buyers will stay on the sidelines, and when there's more inventory, when there's better product, they will come in and purchase. So those are the three choices. Now, I know that there are lots of people out there who do not see a bidding war, who don't see multiple offers out there. They do exist when the product is good, because there is so little product out there. There are so few houses that buyers like and want, that when those houses come up, buyers completely descend on them and make offers, make good offers, and they're willing to pay what it takes to get that house. To give you an example, there was we had a client over the weekend, and we showed a house that was not on the market yet, and the showing agent had multiple buyers coming this weekend to take a look at the house, even though it's not on the market yet. It's not even finished yet. It's still in the construction. And I was chatting with the listing agent, and his expectation was that this house would be sold before it was finished. And it's not that this house has a long way to go before being finished. It has about 30 days before being finished. And it is very likely that this house will be sold within the next 30 days before it is finished and before it officially comes on the market. It will be sold to these buyers that have been looking and looking, and they can't find the right product.
This is not a new construction. This is a house that's just been rehabbed. Mm-hmm. So it's basically done. They're just finished doing like the last finish work. Mm-hmm. This is not a $300,000 or $400,000 house.
This is a multi-million-dollar house.
This is a multi-million-dollar house that the agent is saying, based on the number of people who have come to see it, not even yet on the market, basically, mm-hmm. that all of a sudden he's like, yeah, it's going to sell. We're going to sell it before we even can get to the market, mm-hmm. before we even can turn it on in the MLS, because that's how many people are going to look at this multi-million-dollar home.
Mm-hmm. Right. So this kind of gives you an idea of how interested buyers are in a good product. A lot of people don't want to settle, so they'll either wait or they'll go ahead and pursue something that is a good product.
Okay. Now, so we've looked at all the data in Vegas. Mm-hmm. You can see what's happening here. This is probably the third hottest market we've ever had if you take out the last 2 years, okay? And if you look at last year as the golden standard, which is a little ridiculous, okay? It's completely ridiculous to use last year as the gold standard. You cannot take year-over-year price-over-price changes as the what's going on. There was certainly a lot of fake appreciation last year because people knew mortgage rates were going to go up quite substantially. And there were a lot of people trying to lock in that sub 5% loan or low 5% loan and buy a house. And they were just taking whatever was on the market. They didn't care. They would overbid on a property, right? Mm-hmm. And so those prices from a year ago were a little bit, inflated, right? Okay, here's the thing. So now what we're being told is, the thing I'm hearing is, it's the foreclosures that are getting ready to happen. Like the banks are doing their pre-foreclosure exercises. Like they do this thing before they foreclose. They have like this they do this breathing exercise, right? Okay, Oana.
Yes.
So I went, and then one of the big crash bros did this video about why Las Vegas is the market to have all the, so I went and looked at the data. I went and looked at the notice of defaults. Mm-hmm. I even had somebody come on the comments and talk about all the foreclosures. Mm-hmm. Okay, so first of all, the total number of pre-foreclosures in the last year, notice of defaults, was equivalent to 3 days of this in like 2007, 8, 9, in that time frame, right? Mm-hmm. Okay, that's the first thing. The second thing is that in last year, 2022, we averaged one foreclosure every 4 days, mm-hmm. for the whole city, okay? For 400,000 houses available to purchase. We had a foreclosure every 4 days. It has increased 33%. Oh my God. We now have one every 3 days. I went and looked at the numbers and I was like, there's the notice defaults are benign. They're like really pathetic. There's still no notice of defaults. 99.5% of all people in Nevada have positive equity, meaning they have equity in their house, so they're not getting foreclosed. So now we only have to deal with 0.5%. Most of those 0.5% still have really low rates. They're not going to just give up their house. The fact, whether they're upside down or not, does not mean that they're going to sell the house, right? Because they've got this super low payment. And the foreclosure rate right now is 0.07%. It's a tenth of the normal. So what they're doing is they're looking at last year and drawing this ridiculous baseline as this is a normal thing, and foreclosures are up 33%.
Right. So that's not reasonable, right? I mean, it just isn't. It's like comparing a 21-year-old body with a 60-year-old body. Not the same thing. All right. So let's just kind of face that. I'm
way better fit than a lot of 21-year-olds.
But are you better fit than you were when you were 21?
No, I was in the Marine Corps when I was 21. I could do 20 pull-ups with probably either arm one at a time. No, I was super fit when I was 21.
We got that.
Yeah.
So moving on.
That's not a fair comparison.
Okay, but that's really the point, that this is it's not a legitimate comparison, right?
No, it's a completely ridiculous comparison.
Right. Not only that, but I've made this point before. The banks have zero appetite for foreclosures. Zero. Foreclosures are expensive and banks don't make money on them. Banks are in business to make money. Foreclosures also don't win them any friends. So when somebody, for whatever reason, is unable or unwilling to make their mortgage payment, they need to reach out to their lender, because their lender will go ahead and make whatever arrangements they need to make with them to make things good. Now, that arrangement may be that the person's going to put the house on the market to sell it, and that's possible. But that's not a foreclosure. That means that they'll sell the property and pay off the loan and put the equity in their pocket. The bank may make some other loan modification for them, whether it's to abate some of the payments and put them on the back end, or do something else to help them out until they get on their feet. The bank does not have an interest in doing foreclosure. For those few people that may, for whatever reason, be upside down their homes, again, the bank will make whatever arrangement is going to work out for them. Again, either a payment arrangement, or maybe that they'll help them with a short sale. But again, the banks really are not interested in foreclosures. And we see that because of the low numbers. The low numbers tell us that. It doesn't mean that people don't get in trouble financially. It means that these are being worked out. Because remember, we've been through this process with you guys as far as what it takes to get to a foreclosure. And there are lots of steps, lots of time. So, and with all these steps and with all this time, there's the opportunity to resolve the issue before foreclosure.
Yeah, the current rate we're seeing is about 12% of something that ends up in a notice of default ends up actually at a foreclosure sale. Mm-hmm. So when you see 50 or 60 a month or whatever the number is, that's you can do the math now. We're talking that you're going to get 10 mm-hmm. in a month. So 10 in a month is going to be one every 3 days. It's literally zero. It might as well not be any. Look at think about that inventory slide we showed you. Inventory, more homes are selling than are coming on the market by like 30 to 40 a day. Like inventory, and every 3 days, and those bank-owned homes don't always hit the market. Sometimes they just get sold at the trustee sale to an investor who keeps it as a rental, meaning they don't necessarily come back onto the market. Sometimes they just get bought up and put into the rental pool. Mm-hmm. All those numbers, whatever they are, they already are reflected in the data we showed you. Mm-hmm. Because if they're flipping them, then they buy the thing at the trustee sale, and then they fix it up, put it on the market, and flip it. So it's not like this is. I think people want some external event, and this is my take. Whatever is going on with the economy, whatever. Las Vegas is doing better than the economy. Oakland A's just announced they're leaving Oakland, and guess where they're coming? They're coming here. They signed a binding LOI, letter of intent, to buy a whole bunch of land basically just north of the Allegiant Stadium, right across the freeway from T-Mobile Arena, where the Golden Knights play. Do you know how many jobs that's going to bring? We're going to need more people to move here. If we have more people moving here, we know that 60 to 70,000 people are going to move here this year. Where do we put them all?
That's a good question. Right now, we don't have anywhere to put them all because the vacancy rate for rentals is very low.
0.4% or something like that.
We've just discussed the inventory level of homes. It's non-existent.
They can't buy a new home because they can't buy any homes.
Because there aren't any on the market.
All the new home builders, they don't just have homes sitting around.
No.
They've all sold those homes.
Right.
4 or 5 months ago, people were thinking, oh, but there's thousands of homes that the builders are just going to dump on the... No, they're not. They're like, where are they? We've been waiting for months. They don't exist. We have a problem. The problem we have is not that real estate... I mean, is real estate less affordable than it was a couple years ago? Yeah, because mortgage prices are higher and because, home prices are higher. So both of those mean if you go buy a house, you don't put any money down, your payment's higher. But then why are home prices going up right now? We just showed you the data. They've gone up 4 weeks in a row. Like what's going on? There's something going on. So, this is not the normal thing where, I have an 8% loan. I'm going to sell my house and move somewhere else and get another 8% loan. People aren't selling. That's the problem. The problem is there's so much inventory locked up, especially in Las Vegas, by people that are never selling. All the investors we work with, none of them are selling.
Right. So we've given you our opinion of what's going on in the market, and we've shared lots of data and cool charts with you. What do you think? What is going on in the market? Give us your opinion and share that with us. We're always interested in hearing from you. We appreciate your comments. Please subscribe, hit the notification bell, share the video, and we will see you on the next video. Bye.
Bye.